Hello, everybody, and welcome to our weekly tips for mortgages, the weekly tip. My name is Jaden Bax of Avenue Financial out from Calgary, Alberta, joining you from Mexico at the moment. And I'm joined, as
Attaboy.
always, by my cousin, my mentor, the main man himself, Mike Parkinson of DLC out in Campbell River. How you doing today, Mike?
I'm doing great, Jay, but it's really not the weather here that you're having. I don't know what's
That's
going
right.
on
Well,
here.
that's why you're so pale and I'm so
I know
tanned,
I'm
right? Like,
pasty white. It's the camera. Honestly, it's not me.
oh yeah,
It's
yeah. But luckily, the camera takes off 10 pounds on me because I've been eating like
exactly
crazy. So yeah.
totally.
So anyway, we'll get right to it. Something that it maybe is not talked about that much, and is definitely misunderstood, but it's a huge part of the mortgage transaction, especially if you are, well, not especially if you are selling and buying a house, and it is bridge financing. So, why don't you give us a little introduction to what bridge financing is, Mike?
Yeah, bridge financing, or some people call it kind of interim financing, similar, can get very confusing for people. I've had a lot of clients call me and say, "Hey, I'm just going to bridge. Haven't sold my house yet, but I'm just going to bridge." Well, I'm like, "Nope, that doesn't work." It's like a true bridge means that basically you're bridging your the equity from your home you're using as a down payment to buy the new place. So you have to have a firm sale on your house, right? And so when a bridge comes into play, like let's say I'm selling my house, I've sold my house, and I'm buying another house, but the sale of my house closes 30 days before the purchase of my new one. So I don't have that money, or sorry, 30 days
30 days
after.
after,
Yeah,
yeah.
yeah. See, I'm confusing myself. It's so confusing. So, yes, thank God you're here. 30 days. So, I'm completing my brand new purchase 30 days before the sale of my current home. So, that means that that money needs to come from somewhere for the purchase of my house. So, we do what it's called a bridge, and not every lender does a bridge. So, that's number one thing you got to understand is, does my lender do bridge mortgages for the future, right? So that's something to really ask. So typically it costs you, there's an application fee. It's anywhere between 250, maybe $500, depending on the lender. And it's usually prime plus two. Some lenders are a little bit more. And some lenders will bridge for 30 days max. Some will bridge a little bit longer. Typically, the big banks tend to have a little more flexibility there. So just make sure that the lender you're with allows that, because that's something really important when you're selling and buying. What do you think,
Yeah,
Jay?
absolutely.
Anything
And
to
so,
add?
and one of the things you said there that I think is very important is a firm offer. You've got a
Yeah.
firm contract, sorry, on your house. And so that doesn't mean that I'm going to buy Mike's house and I still haven't waived my financing or my home inspection condition. If those conditions are still outstanding, you haven't sold your house, right? So
Right.
you can't go in and buy this new house and come into the lender and say, "Oh no, I've sold my house. Could you offer me the bridge so that you can pay the down payment until it comes from the equity of my current home?" They absolutely won't do that. So one of the things that's really important as well when you're doing a selling and buying scenario is that you line up the condition dates well, right? So
Yeah.
if I'm selling my house and the conditions for them to close financing and home inspection, whatever, condo docs, whatever else is conditional in that offer, if theirs is for February 15th, and my conditions to close my purchase are on February 13th, I can't close that purchase, right? Because you have the right. You can, of course, you can waive conditions anytime you want. That's the client's right. But I don't know what happens if I close my purchase and I waive conditions. I still have that bridge financing condition outstanding because I don't have a firm purchase here, and then these people don't buy my house. Well, now I'm in a pickle, right? So,
Yeah.
there's so many different things about bridge financing to think about. It's not just I'm going to sell my house and buy another, and I'll use all the cash from my house for a down payment. There's a really structured process that you have to go through, and you need to make sure that you're taking that into account from the very beginning of the buying process. So if your plan is to use that equity in your house, you lived in your house for 10 years, you have $100,000 tied into that, you want to put 80 of that against the new house, you better be talking to your mortgage broker about that early, and making
Yeah.
sure that they have a good relationship with your realtor, so that all of those things that I'm talking about, the condition dates and things like that, can be tied together to make sure that bridge financing is actually possible for you.
Yeah, and the biggest thing, most of my clients, we talk about this when they call me and say we're thinking about grading, blah blah blah, right? We get them pre-approved, and we talk about this. I say, listen, you want to try to have the sale of your house and the new purchase at least the same time, because that makes things a lot easier. You always want to have it either on the same day or the sale of your house, maybe the day before, just to make it easier for the lawyer and notary. So everything jives properly, but the same day seems to be fine. Unless you're out of province, then you need a little bit more time. So that's another thing to talk about. So there's a whole bunch of issues to talk about with this, but the number one thing is have a plan from day one, and then everybody's on the same page, and it makes it a lot easier. Can we do bridge as long as the lender allows it? Yeah, like some lenders are super easy with bridge. It does cost you a little bit extra money. Sometimes they put the bridge amount on title, so that costs a little bit more as well. So again, every scenario is different. So if you have any questions about this, or maybe it's something that you're going through now that you're not sure of, give Jay or myself a call anytime. And if you know anybody that's interested in this as well, please check out our videos or call us anytime. We're happy to help and happy to put a plan in place so you understand what's happening with your mortgage. So.
Yeah, absolutely. Well, thanks for spending time with us again this week, and thanks for being here, Mike. And we'll talk to you next week.
Sounds good, Jay. Have a good one.
You too.